Hi everyone, my name is Mark Quinn. I'm a cross-border tax advisor and chartered financial planner with the Spectrum IFA group based in Portugal. And in this video I'm going to look at 7 common financial planning myths that we come across when dealing with clients and potential clients. So the first one is that people assume that when they've left the UK, their liability to UK taxes cease. Which isn't strictly the case, because if you have UK source income, that can continue to be taxable in the UK, and an example of that would be UK rental property. Another common situation is UK inheritance tax, because UK inheritance tax isn't based on where you live, it's based on your domicile. And if you're from the UK originally, you're likely to have what's called a UK domicile of origin, and therefore the default position is you're going to be taxed in the UK on your estate in the event of your death, and that applies on your worldwide assets, so it's not just assets physically located in the UK. There is planning around that you can do to mitigate or even avoid inheritance tax, but it is a complex area and one that needs careful planning around. Another common myth is that you can come and go as you choose, both in your return to the UK and back and forth to Portugal if you establish residency here. And again, there are rules around this. So from a Portuguese context, you have to be mindful of the fact that when you're establishing residency here, you're declaring that you're going to be in the country for 183 days or more. And this is particularly relevant for those that are applying under the D7 visa process. Also, you have to be mindful of the UK rules, because you can't spend an unlimited time back in the UK if you want to come here and establish tax residency and apply for the non-habitual residence scheme. So if you're going to depart the UK tax system, the UK imposes quite strict day count allowances in the time that you can spend back there, and they start from as low as 16 days, but they can go as high as 182 days. Myth 3 is about the non-habitual residence scheme. So it's a bit of a confusing name that they give to the scheme, because non-resident implies that you're not actually a tax resident of Portugal, when in fact it means the opposite. Non-habitual residence simply means that you haven't been tax residents here in the last 5 years, and that in turn gives you the right to establish your NHR status, and that gives you a 10-year tax programme where you can structure your affairs at much lower tax rates or potentially even zero. But the problem of this confusing terminology is that some people haven't had a clear understanding of what they should do and when, and therefore they've not applied for NHR, or they've missed the deadline for applying for it, or even worse, they've actually been advised not to apply for it. And as I've said in a previous video, I've never seen a case where non-habitual residence doesn't work for clients, so it's always a financial no-brainer to apply for. NHR means I'll pay 0% tax. Well, yes, it could. And we have some clients that we've helped and they are living tax-free here under the NHR programme. However, it's not the automatic default position, and you do need to plan your affairs ideally before you leave your current country of residence, and you need to optimise your position. You can't just apply for NHR and expect to have a 0% tax rate. The next common myth we hear is that because clients are reporting their income in the UK, they don't have a responsibility to make a declaration here to the tax authorities, whereas that's not the case. If you're becoming a tax resident in Portugal, like all other countries, you have to declare your worldwide income and gains, even if they're not taxable here. So for example, if you have a UK rental property, it's not going to be taxable here under NHR, but you still have to declare the euro equivalent of the sterling rental income you're receiving as part of your annual declaration to the finances here. And the final myth is that people are often worried about being double taxed. So taxed twice in their home country and also taxed in Portugal. That's not actually the case. Portugal has a wide network of double taxation treaties. The UK is one of the longest running treaties, dating back to 1968/1969, So if you are relocated from the UK, you definitely won't be double taxed. But how the treaty works is that it gives the taxing right on different assets to each country. So an example would be UK rental property under the double taxation treaty. The taxing right always belongs to the UK. Portugal doesn't tax that whilst you're an NHR. So for 10 years there'll be no tax here whatsoever, and it'll be just UK tax you have to think about. After your NHR period, Portugal does tax the rental income. However, you do get a credit for tax paid in the UK to offset against your Portuguese tax liability. So as I say, there'll never be double taxation. You'll just simply end up paying the higher rate between the two countries. I hope you found that useful. If you've got any questions, please comment or please feel free to send me an email or pick up the phone. Thank you, bye bye.